Excited when you call my name. Oh, ashamed to let the home. And girl, just what you do. Boy, I'm like a turtle. Alright, but train your eyes, bro. Let's get it. Wow, we got a big reaction off that. That's interesting. This is the candle range. Is it just or is it real love? You know, is it just a 'cause I need to know right now. Come on, my baby. Yeah, I mean, we do ranges, so we do freaking. So yeah, we just want to see a reaction out of things. We're not trying to predict the whole thing. We just want to see how it reacts. So right there, for example, like even though we did go all the way up to the previous day, small reactions like this matters. So I'm saying, if you can react from these levels all the time, then you can get the trade all the time, believe it or not. Well, now we have this. Now we have to this point, to this point. So I'm saying. And then we got a, huge reaction off of that. So it's like, it begins to get interesting. But we just kind of deal with ranges, and and if you want it, you can do it from here to here. So you still have the same. Nope, not the same reaction, but still. So we just keep on playing it. I'm gonna play 15 minutes actually. And now we have this huge wick, right? So now we have a new day open. It's first, okay. Whole wick right here. All we're looking for is a reaction. Is there any reason to push up all the way? No. We're not reacting off another. We didn't sweep out anything. Is there any reason for us to continue to just push up continuously without any type of reaction? Not quite. So let's look at that. Perfect. So these can be our area of interest, you know what I'm saying? And look how we struggle to close above it. And then we end up not closing above it at all. So I'm saying? So that stuff is important, bro. Keep that stuff in mind. It's important, and it gives reactions. So I mean, you can get a reaction off of anything. Like, seriously. Once you change it from that perspective to that perspective, like, change perspectives, how to view it, and stop going from try to predict if it's gonna go to this area or this area or whatever. If you just simply just mark up whatever, and then see whatever it has a reaction off of, it's easy, bro. Because there's liquidity. Since you know that liquidity is fractal, it is fractal. And so you know that, everything is not going to continue down, and everything is not going to continue up. Stuff just needs a reaction to certain things to sweep out liquidity. So we can go into 15. We can go into 15 minutes. We can look at all this. And we can break this down. What do we have? Double highs right here. Liquidity. We take out liquidity. And what do we push in? Into here. Now, if this was today, this will also be a nice reactional area as well. We swap liquidity, we into here, whatever, so we can instantly see some sort of a bearish candle. No bearish candle. It's cool. So now we come all the way up here, So at these double highs, tap into this fair right gap. What is gonna happen? I mean, like, bro, it can get simple like that. And as soon as we swap this liquidity, we instantly have a bearish reaction. We come all the way in this fair right gap, bearish reaction. So I'm saying, so it's like, and then we can continue our bearish reactions. Whatever. So you know what I'm saying? It's just dealing ranges basically. Look at everything as dealing ranges, or just a range to put your focus on, basically. So now we have a new day. What do we have? A new day. Right? You just want to mark up the day high and day low. Alright, it's the day high, it's day low. You go to 15-minute, you instantly see, okay, well, double is down there. This doesn't look like strong support. Does this look like a nice dealing range to trade away from? In my mind, no. We do have this area right here. At the same time, we have liquidity all above. So if it goes down here, I'm not really going to be looking. I said all above, all below. I'm not going to be looking to take no type of. I mean, obviously you could get a reaction off here, but see what I'm saying? Market's overall bearish. Over seeking a reaction from freaking whatever. So now we sweep out previous day low, and now look at induced sellers. All we need to do is go on the high time frame, like the daily, and see. Okay, we swept out all them lows. Now, what can we see a pullback from? That's it. You can see we already have a pullback from there, but we continue bearish something. Yeah, we continue bearish to take out this low. More likely, so you can look to the left, look at this low, and say there's nothing to react from. We have no inbound supply, no anything, no huge wicks, no imbalances. What we do have is a huge imbalance right here, and we know imbalances act as a giant liquidity. So what's your new dealing range? This to here. Do we expect price to shoot up all the way like this? No. And if it does, we're expecting it to react off of these levels, 50% or whatever. Now, building intuition to know what's levels it's more likely to react off of, that's like, you have to do that, you know. But now let's look at this. Right? We hitting this level. We take out all this liquidity, more than likely. We take out all this liquidity. All the liquidity is taken out. We hit 50% of the range. Who's induced at this point? Buyers. This is in Asia. But still. Buyers are still induced. Hit 50%. Come up to ultimate, which is good. And we can instantly expect reactions off of this. So we did go all the way up to the high. That's fine. But what do we do? Get it out. What's our dealing range? I mean, you can really write this out if you really want. But I don't want to do that. This is our dealing range. So if we take out this liquidity in order to catching the drift, catching my drift. Look at that perfect reaction off 50%. And why mark up this right here? Because once you already know that we took out liquidity, which is these previous highs, it's going to be even harder to continue higher on a low time frame and go for another high a candle, especially if it's freaking a week ago. Thursday. Coincidence? I don't know. Probably not though. We come back to the Thursday candle. We had to off the Thursday candle. That's tough. That's tough. 50% of that perfectly. Now we can look on whatever. Look how we're reacting on these lows. Look at it. That's just tough. Perfect. What are we doing? Building up a lot of liquidity for this level. Oh, what are we doing? Taking out both highs. We can look at here. Let's see. Okay, interesting. Is he alright? That's the reaction off of that though. See that? Go here. It's cool. Now we can go in a month. We gotta see. Might let down some chains on. That's my mistake, actually. I mean, why this area? It could be something for an intraday. No doubt. Go up to here. Tap that. Look at that reaction. Going to 15. 7. Now what are we doing? Are we surprised at what just happened there? No. I'm not surprised. Fresh candle. Into this fair value gap. Go on here. Swap that to the left. I'll be surprised at what happened there. Do we end up running it? Yes. Do we have a reaction? Yes. Now look at this huge bearish reaction. And it's a new month. Hit the road, Jack, and don't you come back no more, no more. Hit the road, Jack, and don't you come back no more. Now it's all fractal, bro. Now look how much speed we're coming down with, and look how we're taking out this. Reaction instantly, okay. Not a complete shocker, but still. There we go. Perfect. here, right here. Go from here to there. Is that deadline range? Here to here. Come on, bro, stop playing with me. Like, come on, bro. Two. So let's go back to here. Nice reaction. Nice reactions. Specifically, a nice reaction with the network as well. Then, yeah. Gotta continue higher. Let's see. Still have a super here. And then we have now tapped into a fair value gap. Oh. Bahale. But yeah. Weekly down. Alright, so yeah. Now I swept out that's liquidity. Tap into a fair value gap. And we'll simply have this buy area to sell. Buy to sell area right here. Bought up, sold. That's our area. Boom, nice reactions off there. New open. That's a reaction of 50%. Reactions off there. I'm saying, so let's go back to this. And let's look on 15 minutes. Figure out that. Let's go back to hour. Sweep of that. Reaction. 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 Go here. Hit up 50%. Let's go to 15 minutes real quick. Reaction. That's Asia. Close of Asia. Reaction down. Reaction down. It's tough. Alright, hold on, bro. Hit the world. Oh, Jack. Don't you come back no more. All right. That was an insane month, which is tough. Let's extend this again, actually. Let's extend that real quick. And as you can see, bearish reaction more likely. No. Yeah. No. Yeah. Right here. That's how it goes, bro. That's how it goes sometimes. Bearish reaction. We take our previous day low. Tap into that fair value gap. So I'm saying, let's study that right there. That is definitely worth studying. Fair value gap created. Right here. What do we do on the? What do we do? So we have Asia, London. Take out Asia, London, and then we go. Oh, perfect. Take out all these lows in Asia, and then with the rest we just go high. It's tough. Hit the road, Jack, and don't you come back no more, no more, no more. Hit the road, Jack. Let's go here. Look at this. Swam, swam. Perfect reaction over there. Let's go on the 5 minute. Let's see how that was. It's cool. Now it seemed to be taken out just low. It's cool. New day. Are we expecting it to go completely bearish? No. Are we for right gap created? Yes. Take out both lows. Nice. What do we have? This range to this range. Correct. Come on, bro. I'm not tripping out. I'm not tripping out at all. What is it? On the 25th? Five days to take out that candle. A Friday. Nice. Swam. And just like that, double highs created. And versus fair value gap. Which does not mean bearish all the way. We just take out this liquidity. And then tap into here. Then we have nothing up there. But just cool. And then yeah. Then we had a push up.